evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for the last trading day of March. Thank God, what a terrible trading month. And that is March 31st, 2022 at 7 p.m. So we start afresh tomorrow, and maybe it'll be a much better time, a better quarter, who knows. But in the, if you're looking at the metal markets, gold has been a real disappointing commodity. I mean, any way you want to cut it, I'm going to repeat. War, inflation, now you got to release oil from the reserves. I was reading a report today on copper in Goldman, and the chairman of Freeport, both were quoted in this article. Price of copper could double right now, and they still couldn't get more production out of the ground. That is a bullish sign if I've ever seen one. Now, how you apply it, you don't just go into the markets, but you do have to think long term. Maybe you look at the long-term chart, not the daily charts, to trade events like that, but they're telling you what it is. Now, we also heard from the president today and how he's going to take 1 million barrels a day for 180 days out of the strategic reserve. I'm going to ask one question: how? The reports I'm reading, it doesn't mean I'm reading the right ones, but I think I am, there's no way to physically do that. So the only way you can mean 1 million, and he didn't say it this way, you always got to read through what he says, maybe if our allies will do a certain amount and then get to 1 million, but the pros I'm listening to are pretty good, and they go, you can't do that. Not that it's not there to be taken. There's no physical way to get that amount done. So it sounds great for the press. Let's revisit this in a week or two, 3, and see just what it is. It's sort of like OPEC today saying, yes, we're giving you another 440,000 barrels a day. You do realize they haven't once met the 100% increase that they've said from the prior month. Not once. All right? And the 2 swing producers that could do it refused to. The Emirates and Saudi Arabia. They refused to kick up the numbers to get it done. Okay, just remember that down the road. They're not America's friends. When you look at the gold market, you got up to a nice run this month, and now you're backing off. So this is the weekly chart. You know, you look at it, you got one more day to go. It's the end of a month, but not the end of the week. You can see how the markets are sort of just sitting here right now. And the big question that you're going to have traders get to is which way is the breakout? Well, one argument is if you get over this high, you're going to take off again to the other side. And if you take out 1893, you head to the downside. If you look at where the resistance is, temporarily at least, it's at the 18-day average of closes, which is the red line. The green line is the 100-day average, and right here is the 200-day average. So the bias is down because when the market is under the 18-day average, it defines bias. Just closing under it, it does it. It filters the swing line. The next big number are the Bollinger Bands. And what they're starting to do is this. They're starting to wrap their arms around price because volatility, believe it or not, has come out of the market. You're just sort of drifting sideways now, if you will, capped by the 18-day average and bottomed out in that Bollinger Band for the moment. Then I look at momentum, which is pointing up, and it's been up, and you've been challenging the 18-day average since it's there, but you haven't gone anywhere. Now, keep your eye on this Bollinger Band. It's going to be important. And for those of you that want to learn how to work with Bollinger Bands the way that I do, I can give you a doctorate in it. You know, most of the charting courses will give you the basics of what a Bollinger Band is. I want to take you beyond it. And if you'd like to learn this, and I have found in my career, it applies to stocks, the futures market. In fact, anything I can plot on a chart, I can put a Bollinger Band on. Gets to be very interesting. How do you learn this? Just put your finger up here. When you see that icon that appears, just click on it. It'll take you to the website. You can learn all there in the word research on our website. It'll take you right to that area. We then get to the gold silver. And as long as you stay over that 18-day average, the bias is up. What does that mean? Well, if the numbers go higher, it means you need more ounces of silver to get an ounce of gold. That's bearish on its own for the silver, and the silver's in a downtrend at this point. Lower highs, lower lows, sort of getting boundaried by the upper and lower Bollinger Band. I think you can see that. Resistance back at the 18-day average, and support the lower band, which it hit back here. In fact, it hit that, and the 200-day average hasn't visited again. To get the market friendly, and I'm always looking for the what-ifs, if you can get a close over 25.35, you then have higher lows, a higher high than this, 25.26.5, and over that, that'd be a bull sign. But until that occurs, the bears have the edge. In the copper market, you currently have a pattern of a lower low, higher high. You went up the other day, challenged the upper Bollinger Band. So long, that's what you're supposed to do. Now support could come back in at the 46800 level, but you're overbought. So on a daily chart, not the place to be at this point. In the platinum market, you're still very much in a bear phase, but, and there's a big but here, you have a market that, if we look at it together, you had back here, and let's get to it. This day you didn't have both numbers under 20. It started the very next day, which is Monday, both under 20. Tuesday, both under 20. What about this day? Not under 20. You have an oversold market that never embedded and started a correction. So, does it have to go to any of these averages? The answer is no, but it generally works out of the correction phase. And my experience has been that pros don't like to sell when a slow stochastic is not embedded and not back over 30 for both numbers. In the Palladium, I thought that we'd find support here, and so far, temporarily, I've been right. The market fell into the 200 to 100 and lower Bollinger Band. So long, folks. And now this one's a little different because you had the embedded reading. Day 1, 2, now you got 3 sessions in a row where both numbers are under 20. If you lose that, like you did here, and that day was Thursday. Oh, today. I'm laughing at it, but it's true. That tells me that the market is now primed to get back to the 18-day average of closes. It would have to crash today, Friday, in order for that to not happen. Otherwise, I think that's in place in the market. In the dollar index, you're now doing what I call, I'm an F1 guy. Love F1 racing. I have the subscription. I've got the TV. I got the Fire Stick. I throw it on the big set. My wife runs out of the house. But I've always loved car racing, but F1's my ultimate. And they came up with a term this year I've never heard, porpoising. It's when you do this in the cars with the air. And they're trying to work that out with these new cars, first year of these new cars, and they all have this porpoising effect. Well, that's what prices do. They start going within the Bollinger Bands like that when they get narrow. I called it, winding up like a screw, but I like that porpoising event too. I really think the screw's a better one though, and I'll probably go back to that. I loved what it did. Why do I think it's more important than the porpoising? Because the longer the prices go sideways, the bigger the eventual move when you come out of it. And the tighter the band gets, the bigger eventual move. So you put that together, you try to come up with a game plan, and I have one. Want to get a doctorate degree in understanding Bollinger Bands? They're so darn important. Take your cursor, put it up here, and learn. I'm Ira Epstein. You have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.